Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Pierre Rochard. Pierre, thanks for joining us today.
Thanks for having me on, Tim. I've been a long time listener.
Uh, Absolutely. We were talking a little bit beforehand. Can you tell us a little bit about your background and what really brought you to where you are today, physically in Austin, Texas, and also the CEO of the Bitcoin Bond Company? I'm sure we'll get into it.
Yeah, sure. That sounds good. So I ended up in Austin because my father works in semiconductors. And so originally we're from France, hence the very French name, Pierre. Both my parents are French. We moved to Scotland, we moved to Arizona. And most of my life I've spent in Austin. I went to the University of Texas at Austin. I majored in accounting. I started my career out at Deloitte in Jersey City, right across from Manhattan. And there I was actually performing attestation services for new issuances of securitization transactions. So this is mortgage-backed securities, commercial mortgage-backed securities, and other kinds of esoteric asset-backed securities, whether it's student loans or credit cards or cell phone towers and the like. And that was where I started my career out. But in parallel, I was learning about Bitcoin. And already back then, I was thinking about, well, gosh, why not put Bitcoin as the collateral instead of these other assets? And that, I already had the view that Bitcoin was going to outperform these other assets. But obviously, it was early days. This is around 2013. The Winklevi twins tried to file for an ETF that got denied. So watching that play out and seeing the hostile SEC, it was pretty clear to me that there was not going to be a Bitcoin-backed capital markets anytime soon in the U.S. On top of just Bitcoin not really having a whole lot of acceptance as an asset throughout kind of the investment world. But from Deloitte, I went to BitPay, which was doing Bitcoin payment processing in Atlanta, and had a really great experience there. Also spent some time in TradFi at Hudson River Trading and at Axial, a middle market M&A platform, before really getting deep into Lightning. So in 2018, started the Node Launcher, which was an open source software that allowed you to access the Lightning Network. And my motivation for that was to be able to send Lightning payments from inside of Excel, which was kind of unconventional among a lot of open source developers. They never really touched Microsoft Excel, but as a business guy, I thought it would be really neat to be able to do that. Accomplished that and got pulled into implementing Lightning at Kraken, one of the largest Bitcoin exchanges. And we launched the Lightning product there. But at that point, Elizabeth Warren started attacking Bitcoin mining, and it kind of seemed like a nice project to take on to put out that fire. And so I joined Riot as the VP of Research, built up a public policy practice there, pushed back on all of the attacks on Bitcoin mining that happened under the Biden administration. And then we won. And now not only is Bitcoin mining not under attack, but the SEC is now in good hands with Chairman Atkins just yesterday formally becoming chairman. And now we have a merit-neutral regulator that I think lays the proper regulatory environment for really accelerating Bitcoin adoption in capital markets. So that's why I decided to found the Bitcoin Bond Company in a nutshell.
And can you walk us through that process? Like, at what point was it an idea, and at what point was it, okay, we're going to take this idea and we're going to run with it, and here we are now?
Yeah, so it was an idea summer of 2013 in an Excel spreadsheet of putting together what would a cash flow waterfall look like for tranching up the risk for Bitcoin. And then with Trump's election, it was already known that based off of his speeches that he had made and some of the campaign promises he had made, that he would really approach regulation in a very different manner than Biden did, especially when it came to securities and the broader crypto ecosystem. So it quickly became apparent to me that this was going to be something that I would be obsessed with, and would not be able to stop thinking about. So that's really, when it became clear to me that I needed to leave Riot, and Riot's in good hands. Obviously, it's a fantastic business, but I really wanted to explore this opportunity, and to start my own company. So since leaving Riot a month ago, I've been really working behind the scenes on some of the different aspects of what it'll end up looking like to securitize Bitcoin.
What are the flagship products or services or both? How are you thinking through that? Are things launched at this point? Is it pre-launch?
Yeah, so nothing's launched, and there's a lot of work to be done to get to that. I think that conceptually, what I really want to hammer on is looking at Bitcoin over the long term. I think that if we look on the history of Bitcoin and its leverage, that the leverage has been a very short term leverage. And it has been a philosophy of liquidating in a flash crash, right? And so we've seen a lot of Bitcoin volatility historically has been driven by this cascading liquidation issue. And obviously, I saw it at Kraken, but also saw it at BitMEX and externally at other trading venues. I think that was really symptomatic of the fact that the SEC was not approving products that were backed by Bitcoin. And so, in order to have more long-term approach, there needs to be things that are do go through the regulatory process of actually getting approved by the SEC. And so, the in terms of what it'll end up looking like, that's all going to be a part of the product development process. But I really wanted to plant my flag in the ground of launching the Bitcoin Bond Company and making it clear that this is, what we're working on and what we're going to be exploring in the future. So, if we look at what a typical Bitcoin or what a typical securitization transaction looks like, you would take any kind of asset. Now, typically, it is a cash flowing asset, right? So, this is very different from Bitcoin. And a criticism that a lot of traditional investors have had of Bitcoin is that it doesn't have a cash flow. They're used to thinking of a loan product, for example, where a mortgage, right? And so everybody's paying their monthly mortgage payment. They can take all of those mortgages, which to a household, the mortgage is a liability. To the mortgage lender, the mortgage is an asset. And so they accumulate these assets on their balance sheet. Eventually, they run out of capacity on their balance sheet to be able to originate more mortgages. And so they want to move those off of their balance sheet into a separate entity. And so they'll spin up a special purpose vehicle that will purchase the mortgages from the originator. And then on the financing side, it will issue a set of securities that actually have a really interesting payoff structure where you have senior bondholders who they are the ones that whenever the cash comes in from the monthly mortgage payments, they get paid first, whether it's principal and interest or some combination thereof. And then as it goes through that waterfall, then it goes to the mezzanine bondholders and then the junior bondholders, and then finally to whatever equity residual is a part of that mortgage-backed security special purpose vehicle. And so that is a way of saying, well, we're going to have a pool of assets that has a particular risk return profile. And on the asset side, but on the liability side, we're actually going to reconfigure the risk so that we can have a top tranche that is de-risked because they are getting paid first, and then a bottom tranche or an equity residual that's actually highly leveraged on all sorts of questions about whether there's prepayment risk in the pool or default risk in the pool, and that you're really concentrating the risk on that tail end that is leveraged long on the mortgages. And so that's how it works in a typical fashion. With Bitcoin, we have to artificially create the cash flow, right? So that can happen either through the sale of the Bitcoin, right? So liquidating them. Now, as your audience might have heard, you're not supposed to sell your Bitcoin. So the other approach is to simply refinance them. And so saying that in the future, we'll be able to get a new set of investors, or the same set of investors are applying a different, part of their portfolio or significant amount of cash to then refinance the Bitcoin and to pay off the old investors. And so that's really, conceptually how we can create cash flows for Bitcoin is by selling it or by refinancing it. There's been other, theories or attempts at creating cash flow with Bitcoin and creating Bitcoin denominated yield. Personally, I'm very skeptical on those. I think that they're a whole other universe of risk. And so if we're trying to create financing of Bitcoin where the risk is really about what is Bitcoin's price in the future, then you have to remove the kind of rehypothecation type of risk that you would have from trying to generate Bitcoin denominated yield, and really just kind of have cold storage Bitcoin that is going to give you purely capital gains yield rather than anything else.
What do you envision as target customers? Is it more institutional? Could it be all the way from retail individuals to corporates and institutions or nation states?
Yeah, so asset-backed securities, I think, are so complicated that they really are only appropriate for sophisticated institutional investors. I think retail has lots of fantastic options already available to them, ranging from spot Bitcoin, from river.com onto their hardware wallet to Bitcoin ETF to MicroStrategy to then the series of Strike and Strife, and even we can talk about MSTY. So there's just a wide range of products that are already available to retail investors. This is really about accessing the wider world of credit funds that are interested in vehicles that don't have any corporate risks, them don't have active management. All of the terms and conditions are set up front for the life cycle of the entity, and that there really is a completely different governance model of having a third-party trustee that is representing the bondholders and a third-party custodian that is separate from the sponsor, the Bitcoin Bond Company. And so this is really about creating a governance framework that is very familiar to institutional investors who have invested in asset-backed securities in all sorts of different markets, from containers on container ships, container leasing there, to all the way to cell phone towers and any other kind of asset where they're really looking to be able to separate different classes of risk. Meaning that in terms of Bitcoin, what a senior bondholder is really underwriting is the continued existence of the Bitcoin network. The view they have is that Bitcoin's here to stay. They might not necessarily be doing the moon math that it's going to $5 million or whatever, but that it's proven itself for the past 16 years to have staying power, and that it will continue to accrue value, or at the very least go sideways. And so that's why they're taking the top of the stack, where they're very over collateralized relative to the other investors in the structure. And then in the mezzanine, you have the people who are chasing maybe a higher yield. So this is where you might have a credit fund that is really directionally bullish on Bitcoin. And they're looking for a way to outperform their peers. And they think that, Bitcoin's going to continue to go up, and that they want to have a risk appetite for that. And then the junior tranche is really the ones who are most gung-ho and that are really leverage long Bitcoin, essentially. And so that's going to be more on the hedge fund side, where they see Bitcoin adoption at the nation state level, at the corporate level, and of course at the individual level, continuing to grow at the same rate that it has in the past. And so it really offers a way to crack up Bitcoin's risk return to different institutional audiences.
How do you see the role of Bitcoin in the global fixed income market, say over the next several years, 5, 10 years? We've seen Michael Saylor come out and say he wants for his corporation 1% of the bond market. That's like $3 trillion. So how does all of this kind of evolve from the corporate level with companies like Strategy and Metaplanet, and then more on the institutional, maybe nation state side?
Yeah, so I think that what we're doing here is we're building bridges. And I think that this is really in contrast to a worldview of Bitcoin as being something like a lifeboat. I don't see Bitcoin that way. I see it more optimistically, maybe touching on Saylor's hope for Bitcoin, which is that it's an upgrade. So it's not like we're trying to escape the Titanic into a lifeboat. Rather, we're moving from an old school cruise ship like the Titanic to a more modern cruise ship that has better amenities and is more affordable, right? And just is a higher quality of life. And so providing those bridges, I think, is crucial, especially when we think about the wider investment world, where you have people who, frankly, they're not as tech savvy as we are. They're not as plugged into X or listening to podcasts, and are not just doing their own research on individual securities that they're purchasing, but rather they are out living their life and they just assume that everything's going to be fine, that their pension fund manager is going to make sure that they have a retirement, or that their index fund is going to be there for them in 30 years. And so for them, I really think it's important for Bitcoiners to essentially meet them where they're at. And that does mean going through financial institutions and developing products that are going to help bridge Bitcoin to people who don't care about Bitcoin, right? They don't know how important Bitcoin is. They don't know how to use a hardware wallet or what multi-sig is. But I still think that if we end up in a world where Bitcoin becomes the global reserve currency and just outperforms all other assets, if the ownership of it is very concentrated and it's only among, let's say a set of 500,000 Bitcoiners, I think that that's problematic at a societal level. And so in some ways, I see the financialization, or rather the Bitcoinization of finance, as a way of distributing ownership to a much wider audience than would otherwise occur if we just relied on kind of the organic cypherpunk adoption of spot Bitcoin.
Got it. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. Join us May 27th through the 29th for Bitcoin 2025 in Las Vegas. Use code KOTZ for 10% off tickets. Do you envision nation states issuing debt in Bitcoin in the next decade or so?
So I really liked Andrew Hans's BitBonds proposal to do that, to say that part of the bond proceeds will go towards buying Bitcoin, and that would allow other investors to be able to access Bitcoin because they are so risk averse. They might only want to buy something that is really government endorsed, right? And government backed. So the benefit to the government would be to lower the interest cost. Right. And I think that Saylor has really proven this out with the convertible debt, that by having the embedded call option, having that upside in the fixed income instrument, that you're able to push down the coupon to, in Saylor's case, 0%, but really, 1-2%, that is much lower than today's rates. Because if we look at the past administration, they really brought the debt much closer on the term structure, and now having to refinance trillions of dollars worth of treasuries is causing the interest expense for the United States to explode, where it's over $1 trillion, greater than the budget for the Department of Defense. And so lowering the interest expense, I think, it helps on the government side. And then on the Bitcoin adoption side, of getting a wider audience of investors. But I think the challenge there obviously is the politics, right? That of having to persuade the right decision makers, and then of course also that all of the infrastructure that exists around treasuries, they might not necessarily be set up to provide for the valuation of the securities and to understand how it fits into kind of the broader securities market. So we'll see how that evolves. It might be the case that state and local governments actually adopt this before the federal government does. We've even seen, on the Strategic Bitcoin Reserve, we've seen legislation advance at the state level. So perhaps there'll be more traction there. So I all that to say, overall, I think that it's a great idea. It would be better to adopt it sooner rather than later. But as we all know, government can sometimes move slowly, and it might need a crisis situation, unfortunately, to be a catalyst to actually encourage them to explore more exotic options.
How would a Bitcoin bond offering, as you envision it, be different from El Salvador's kind of volcano bond initiative? Were there any lessons learned in that effort from your view?
Yeah, I think that First of all, it's really a question of what are you financing, right? So, in my case, I think that what makes the most sense to finance is the best collateral in the world, which is Bitcoin, and also then, rather than any other kind of investments or other assets that one could finance, and then link it to Bitcoin. So I think that just having spot Bitcoin on the asset side of the balance sheet is really important. And then also having a governance framework around it. That is to say that, we want to make sure that the investors have full transparency of who is holding the Bitcoin, having that in a custodian that they are comfortable with and might already be using for other purposes as well. That's really institutional grade. And then also who is representing the bondholders and making sure that from a rule of law perspective, there's really no legal risk that things could go sideways. And so, that's why I founded the Bitcoin Bond Company in the United States. There's lots of other jurisdictions where you can engage in international finance. But I continue to see the United States, despite the prior administration's politicization of the SEC, I think the U.S. is going to continue to be the place where capital formation is most dynamic and highest growth. And so that's why I think that it makes sense to develop a product that's domestic.
Are there any regulatory or operational barriers to launching Bitcoin-backed debt products in the U.S. at this point? Like, what's on your radar, or anything that catches your eye?
As of November 5th, or really January 20th of the inauguration, no. The SEC has a lot of work to do on its end to kind of clean up, but we've seen that it's been very active in terms of turning the ship. And I think that from that perspective, they're really interested in making sure that filers are being transparent about the risks involved. And I think that, when we look at Bitcoin filings with the SEC, there's now a rich history of risk disclosures around Bitcoin. So whether it's strategy or the Bitcoin mining companies or the ETFs, they've had extensive back and forth with SEC staff on all of the different risk disclosures for Bitcoin. And combining those with the risk disclosures of asset-backed securities is just a priori not particularly complicated, because both have already existed in the past and both have been through the ringer, so to speak. So I think that part is really not the barrier. I think the barrier is what really gets me excited about this venture is the Bitcoin education. And so really being able to educate a whole new set of investors about what Bitcoin is, where the opportunity lies, where the risks are for Bitcoin, and kind of providing that as a resource and debating it, right? I love to argue about Bitcoin with intelligent people. I know that there's lots of intelligent people in the fixed income world who, some of them, they don't have an opinion on Bitcoin. I'd like to help them form one. And others might be antagonistic towards Bitcoin. And maybe there's room for a constructive dialogue there.
Are there any other jurisdictions that are, in your view, kind of ready that you would hypothetically go into, or that just need a little bit of progress to be attractive to a firm like yours? Or what do you think on that one?
Well, I'm really a United States maxi. I really think the United States has the deepest, most liquid capital markets and the best rule of law, and so that's really what I want to focus on. I understand there's lots of there's other as we've seen obviously with Metaplanet, their bond offerings in yen. The yen is a currency that has its own set of issues, and so the bond market there, is I think going to continue to be favorable for Metaplanet and any other Bitcoin Treasury companies that offer there. In Europe, we've seen the blockchain group from my friend Alexander also taking a crack at that. So I think that there's lots of entrepreneurs and Bitcoin Treasury companies that are going to be active abroad. I'm really focused on the United States. I think that it's first of all, I'm an American naturalized citizen. I used to be just a French citizen, but I really see this as my home, and English is my preferred language.
Can you walk us through how you would think about custody and risk management for the Bitcoin bond company? I guess from the view of both issuers and bondholders.
Yeah, so what I'm really interested in is isolating one particular risk, which is Bitcoin price risk, and then taking everything else out of the picture. In terms of custody, it's really about finding the right institutional partners who already have market acceptance from that perspective. I don't have any interest in holding the keys myself, and that. We want to put these coins in cold storage. That's really, I think, having a long-term view on that is really critical. So that's on the custody part, and that on the governance part, making sure that we partner with an institutional grade trustee who has a lot of experience in asset-backed securities and also understands digital assets and its particularities, so that for the bondholders, the risk that they are underwriting is really Bitcoin's price risk. And that already is a lot to chew on. Really wanting to remove any kind of the corporate governance risk or where the money is type of risk. I think that's critical for the success of a product like this.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today.
Europe's richest Bitcoin heritage site. Prague. BTC Prague. The biggest Bitcoin conference on the continent.
Join us June 19th through the 21st for Bitcoin Prague 2025. Use code KOTSMAN when you buy your ticket at btcprague.com. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. I guess shifting a little bit to the corporate or corporation public equity side of things, what thoughts or experience or advice would you give to a CFO, a CIO, a CEO, a board member at a mid-sized public company considering Bitcoin and fixed income strategies on their balance sheet?
Yeah, so I think that a lot of it comes down to we often say, hey, let's focus on the balance sheet, and Bitcoin's all about fixing the balance sheet. Realistically, they do also have to look at the income statement, and that historically has been challenging for Bitcoin. So under the prior accounting guidance, it was that it was down only, which was not really favorable or realistic, or helpful to investors, frankly, that you could only write Bitcoin down. Now that has changed, so you can write it up. But it also, that fair value is a double-edged sword. And so if you really don't want the quarter to quarter changes in Bitcoin's value to be, muddying the water or creating difficulties in communicating the value creation at the company, then I still think that it makes sense to look at the fixed income world and to look at finding ways to access Bitcoin that does not have or has a reduced level of volatility from an earnings impact perspective, if they're not pursuing what I would see as kind of the pure play approach of saying, hey, we're going to recapitalize the company on a commodity. You can't recapitalize a company on securities, right? Then you start tripping the Investment Company Act at, I think, 40% of the balance sheet. And so, what I'm really interested in exploring with corporates is what are the opportunities for developing securities products that are fit for those who are not interested in going all in on Bitcoin, but still want to be able to have Bitcoin exposure in their treasury that would be a mix of what commodity and security linked exposure. So on the other end of those who want to really go all in and to replicate MicroStrategy's approach, I think that it's all about, frankly, selling underperforming assets, managing the liabilities, right? Selling more equity to be able to buy more Bitcoin, and that's a process that Saylor was able to really navigate very well. I thought he did it in a way that was very respectful of shareholders with his tender offer at the front end. And so I think that you do have to keep in mind that capital markets are about trust. And so you have to be respectful of the shareholders that have been with you on the journey so far, and to be able to communicate with them why you're changing gears, why you're looking at Bitcoin, and to give them an exit, right? That is cognizant of the fact that not everybody is going to be excited about a pivot to Bitcoin, but also that a lot of them, you've earned their trust, and so they will continue with you on this journey, and that you're going to have lots of new investors as well who are interested in Bitcoin-backed companies. And so I think that it does require striking a balance. We're seeing how things play out with GameStop as kind of the next large bellwether of what does a Bitcoin Treasury company look like at a greater scale. So I think that there's a lot of nuance to navigate in shifting gears towards Bitcoin, but that ultimately you have to keep your eye on the ball, which is that Bitcoin is a asset that has unprecedented scarcity, and so it really is building with steel, as Saylor would put it, and that's the light that you have to move towards, and to be able to communicate that with your shareholders and other stakeholders, employees as well, right? Who quite often are getting compensated in company stock, and obviously want to have continued career progression, being able to clearly communicate what the company is going to do from an operational perspective and how those operations are supporting the Bitcoin strategy, and not just saying, hey, look, we're going to figure things out in the C-suite and leave everybody else in the dark.
So Bitcoin, the commodity, we've seen ETFs come out where you can just buy Bitcoin. We've seen other structured products where it's 2x Bitcoin in both directions, which is interesting to say the least. And then using strategy as the textbook, literally example, you have the common stock, you have these ETFs that are 2x long, 2x short, you have these newer products with Strike and Strife. You mentioned, I think, MSTY. Can you walk us through those products, how you view them like individually, and maybe how they could work together, just from an analytical point of view? And are there any pools of capital, parts of the capital markets that these products that are on the market are not addressing that maybe we could see moving forward?
Yeah, absolutely. So I think that there's first of all there's kind of the threshold question of what is the trust model, and so as Bitcoiners, we're very used to thinking about the trust model of spot Bitcoin itself as a commodity that we're holding on our own private keys that has no counterparty risk, and that we're very averse to making compromises on that trust model, and that when we look at securities, it really is, to put it in pejorative terms, trust me bro, right? Which is that you're trusting a third party with your money, and that you're trading your money for a security, piece of paper. And so I think that's the first threshold question, where if that's not something that you're interested in doing, then anything downstream of that is not going to be interesting to you, and you should just stick with spot Bitcoin, locked up in cold storage, and that has performed very well over the long term. And so that more power to that. I'm a huge fan of it personally, obviously, and that will continue to be, I think, the backbone for all of this, and kind of the base layer for all of this. So then, building on top of that, when we look at the equity in a publicly traded company, there is the management, right? So the management, the active management of a company, presents both the risk that, what if they screw something up? What if they make a wrong decision? But also the opportunity that, because they are actively managing the entity, that they're going to be able to create value for the shareholders by engaging in either operations, right? So generating operating cash flows, or, and this is arguably more controversial in many ways, which I find interesting, which is creating value on the financing side, by essentially finding ways to issue liabilities or to issue equities that are accretive to the common stock, and to essentially create value using the capital stack of the company. Um, and I think there that what has been challenging for folks to understand is that financial engineering gets viewed as essentially a fixed pie, right? That it's not, you're just slicing the pie in different ways, and that you're not creating value. Whereas, let's say, um, aeronautical engineering, right? That you're creating an airplane, that obviously is creating value by helping transport people to where they want to be. And so I actually have a very contrarian view there. I think financial engineering does create value. And the way that it creates value is by creating investments, securities, right, that are meeting the needs of different audiences. And so there's lots of people who have complained that Bitcoin is too volatile. And so they want something that has more downside protection. So if we look at what's out there right now, you have Strife and Strike that are, Strife is furthest out in the downside protection because it's at the top of the capital stack for strategy. And I think that Strike is below that, and taking a little more risk in order to have a little more upside return. And so there, I think that that really meets to the investors who are more conservative. And that does create value because now you've made Bitcoin accessible for people who would not have purchased spot Bitcoin beforehand. Um, and that also means that MicroStrategy MSTR then becomes leveraged up on the risk appetite side. And we've heard a lot of people say that they're not interested in spot Bitcoin because they want to try to outperform it. Historically, they might have gone to altcoins and said that, hey, I'm going to buy Ethereum or Solana because I want to try to outperform Bitcoin by taking on more risk. But it's interesting because if we look at Ethereum over the past 5 years, it has underperformed Bitcoin despite this most recent bull market. And so what I think those investors missed is that it's not a pure mechanical type of leverage where, hey, if Bitcoin goes up, this will go up by more. And those other assets come with their whole other universe of risks that mean that they could underperform Bitcoin even when Bitcoin is going up. Whereas MicroStrategy, MSTR, the common stock, and other leverage long Bitcoin plays, you could look at options or futures, derivatives like that, provide a clean form of leverage where, yes, mechanically, when Bitcoin goes up, now, big caveat here with MSTR, assuming the ATM is not being, utilized to issue shares and buy more Bitcoin, that the performance will be increased on the leverage long. So I think that then when we go further out on the layers of capital, when we look at options on MSTR, and then people taking on income generating option strategies and productizing those inside of an ETF like MSTY, that becomes absolutely fascinating to me, because the number one complaint about Bitcoin has been that it's too volatile. And now we have a product out in the capital markets that is monetizing that volatility. And I've been thinking a lot about what impact does that have at a macro level for Bitcoin? If you have lots of people that are really attracted to the income generation side of this stack, does that mean that Bitcoin actually becomes less volatile? Because essentially volatility is being dampened by these products that are harvesting it. And that might or might not be the case going forward. I don't have a directional view on it. But it's a really interesting intellectual question of because as somebody who is always looking at adversarial thinking and always trying to find ways of how does this break, looking at whether it's IMST or MSTY or these other or just people who are just writing covered calls and having put spread strategies and all of this, trying to see where do these break. And it's like they do break in some really extreme edge case scenarios, but then in kind of outside of that, they actually function as their prospective states, and so that's really that's where we're entering into a new world. It feels like for Bitcoin adoption that I would never even have guessed a year ago that we would enter into, and that's I think the beauty of financial engineering, but built on a solid foundation, right? When we look at historical financial engineering, where long-term capital management, they became highly leveraged on bonds that were backed by fiat, right? Or if we look at the 2008 financial crisis, where you had mortgage-backed securities that were backed by loans, liar loans, as some were called, ninja loans, right? No income, no job, or overpriced real estate, right? Where the collateral was just people were not being clear-eyed about the drawdown possibility on the collateral, and they were saying real estate only goes up. Well, I think that Bitcoin has the benefit of, one, the fundamentals of the scarcity, but also that people are really clear-eyed about the fact that, yeah, Bitcoin has huge bear markets. And so if you're thinking about Bitcoin risk, you do have to model those in. You can't just assume that Bitcoin only goes up. No one would do that in designing these products. And so I think that it actually ends up creating a form of financial engineering that's far more resilient than what we've seen in the past in other markets. And that it really it's exciting to see it develop going forward.
Looking out, let's say 5 years, what would success look like for you with the Bitcoin bond company? Are we talking trillions of dollars? And as far as issuance and Like, is this a new type of financial discipline on hard money, or like, yeah, what would success look like?
Yeah, I think success would, first of all, be success for the investors in any kind of products that we develop. That is that they, might not have been able to buy Bitcoin as a commodity or buy MSTR as an equity, and that they needed a credit instrument that was very strongly backed by Bitcoin, and that they found success in outperforming their benchmarks versus their peers, and that that turns into a flywheel of then helping grow the market for Bitcoin-backed bonds. Um, and that we would set a standard for transparency and for institutional grade governance around these securities, so that we can have a really, a way of introducing Bitcoin to the wider investment world that is responsible and that is responsive to their needs and to what they're looking for their portfolios. So, um, numerically, our plan and our ambition is to have $1 trillion worth of collateral that is financed by these bonds over the next 21 years. I think that we have to have a long-term view on all of this, because all of this is very new to the credit world, where they have really not had any kind of reason to think about Bitcoin in the past. And so now we're giving them a reason to think about Bitcoin, and it's going to be a long journey. I think, though, that a lot of these credit funds, there's already one Bitcoiner here or there. I think that any company that has more than 100 employees probably has somebody on board who is on Twitter or X, and has listened to his fair share of Bitcoin podcasts, or her fair share, and is interested in having the conversation. So I think that it's going to be a mustard seed, and it's obviously going to need to start small. But over time, I really want to see this grow into being a way of financing the Bitcoin economy, and that as more Bitcoin get captured into long-term collateral, that increases all of the other Bitcoiners' purchasing power. And so in a way, it is helping the entire network.
Appreciate your time today. I'll send it over to you for any final thoughts, and if you can let people know where to find you and the Bitcoin Bond Company online, and also if there's any resources that you enjoy using that you'd recommend to others, and if there's any events or conferences or other places that people can find you, or things that you might be attending coming up throughout the rest of this year.
Yeah, thanks for having me on. It was a pleasure. You can always find me on X at Bitcoin Pierre, and I'll be speaking at Bitcoin 2025 in Las Vegas. So I'm looking forward to that. And I'm really excited about where Bitcoin is going in 2025. Already, we've seen a lot of developments this year on the capital market side, but also on the technology side, which make me just increasingly bullish. Been researching Bitcoin for more than 10 years, and every day it feels like it's more exciting than the previous. So thanks again, Tim, for having me on, and look forward to continuing to listen to your podcast.
Pierre Rochard, thank you so much.
Thank you.